Okay, Brent from TradeGuild.blogspot.com. This is part two of January 3, 2007. You'll be seeing this on the morning of January 4. Okay, so we just looked at light sweet crude oil. We were talking about the dollar and the weather forecasts. So, of the top 10, as far as I could tell, I did a scan of industry groups. So the top 10 worst performers in the industry groups were all in energy and mining. Okay, so the beneficiaries of cheaper oil, because that's what we're looking at. Who are the beneficiaries? So I'm going to pull up a couple of industry groups for you to take a look at. And the first one here is going to be trucking. I don't pull these up right very often, so let's hope I get it right. So there's trucking up 3.81%. Of course, cheaper oil means reduced expenses for the trucking companies. And the other one, I bet you can guess, MG771, which is major airlines, up 4.46%. Now, transportation was up pretty much across the board. If we take a look at the the Nasdaq. Let me just pull that up real quick. TRAN, I think it's dash X. Okay, here's the Nasdaq Transportation Index, which has been divergent for 6 weeks or so with the Nasdaq if you're in the Dow theory. But big pop today, you can see up 3.79% in transportation. And how do we know that this is due to oil? Okay, let's take a look at, let me see if I get this right, MG777. This is transportation, but it's railroads, down 0.23%. So trucking was up 3.81, major airlines 4.46. Oil itself was down 4.47%, and airlines were up 4.46. So there's the direct correlation. Railroads did nothing, and that was the deal there. I'm going to pull up the S&P 500 real quick and just address one last thing here, and that's the Santa Claus rally. Yale Hirsch discovered the Santa Claus rally. I'm not sure when, but anyway, he writes the Trader's Almanac, which is a must-have. If you don't have it, that's a book you definitely should check out. And basically, the idea here in the Santa Claus rally is, actually, let me pull up the spiders here. Oh, one more time. Okay, the idea in the Santa Claus rally is that the week between Christmas and New Year's, more or less, the first trading day after Christmas into the first 2 trading days of January, usually we see a rally there due to tax reasons and due to injection of funds and rebalancing and so on and so forth. So generally speaking, that rally in the S&P 500 from the first day after Christmas to the first 2 trading days of January is 1.5%. This line represents that first trading day. We're going to take a look at what we have so far. Tomorrow's the last day of the Santa Claus rally. So far, we're down 0.15%. So the average rally is 1.5%. Typically speaking, historically, if we don't get a Santa Claus rally, the market for at least the next 6 months and possibly the next year generally enters a recessionary or a bear market. So do with that as you will. So now I'm going to go ahead and show you some ideas real quick. Let's see here. I've got longs and shorts. I've got a bunch of ideas. These are just ideas. I haven't gone through and vetted them all the way, but they're ideas. And a lot of these are going to be, almost all of these are going to be based on a couple of fundamental factors that I've been looking at recently, and that's high PE and low cash flow. For some reason, these stocks do pretty well. And the other thing is going to be based largely on that new indicator that I have because I love it. It's just, I've seen so many instances of where it has been right on and it contradicts other indicators, and it's generally right. And this is something I wrote, and maybe I'll share it one day here. So anyway, here's REDF. Now this is one that I was looking at yesterday. I actually bought this for my portfolio on the Zacks contest. It was down pretty decent today, almost 2%. But I still like it, and I'm going to show you why. A couple of things I like here. here's that indicator, okay? So, like I said, we're looking for divergences in this indicator, and it's based on time segmented volume along TSV of 55, which is a long period showing long-term accumulation. So here we see at these bottom here in June, the retest of it, it actually made a higher low up there, and then we saw a nice rally based on that. So that divergence produced the rally. You can see we kind of maxed out up here, and we started heading into a little bit of a sideways movement in here, and now we're back up again. We're slightly, divergent in this fact, but we're very positively divergent from over here where price was much higher. So REDF I think is worth a look. Let's just take a look at the same indicator on an hourly basis. As far as entries go, this works out really well too, and we can see on an hourly basis it's pulling back. It's pretty much in lockstep, but now we have a nice move up, and that's roughly equivalent with this area over here. So that's a positive divergence brewing in Red F. Now I've given a pretty good explanation of that, but I don't have time to do it with every stock, so I'm going to show the indicator. You can always pause the video and take a closer look if you want. Here is POSS, which is another one that I bought for that portfolio. And let's take a longer term view of it. You can see the resistance that it's struggling with basically is from this exhaustion gap back here in 04. And this has built a huge base over 2 years. Now it's up at that neckline area. It's going to test that resistance up there. And if we take a closer look at what it's doing, it's actually going to pull back in here. It kind of looks a little bit like an ascending triangle. You could also make a case and say, well, maybe it's a bearish wedge. I'm not so sure about that one, looking at the indicators and everything. But anyway, we have the typical volume pattern that we would see. It's pulled back up here at resistance. Not a big deal because it was rallying up on very light volume there, which is fine. One of the things, like I said, I don't think it's a wedge because the MACD is looking very good here, and I think if it pulled back to I guess that's about 1275 in there, I think it would make a pretty decent entry, maybe with a stop below 1250, and then let's see. Again, it's a little bit more difficult to see, but look at how this indicator is just, at multi-year highs right now. So this is something very bullish in my opinion. You can see how it's worked over here. We made lower lows, and this indicator was stepping up. You can see we got a nice little rally based off that. And when we got to this peak over here, you can see it didn't make a new high, and subsequently it pulled back as a result of that. Again, price is heading down over here, the indicator's heading up, and we are at very positive divergence there. So if we look at some of the other indicators, you can see money stream over here in red, BOP, and time segmented volume 18 all look very constructive. So POSS is one to keep on the radar. As far as intraday, let's take a look at my favorite indicator here on intraday, and let's see what's going on. It pulled back pretty sharply, as you can see here. So this is something we're going to want to keep an eye on as it pulls back to this support level. If it holds that support and it bounces up, I think it's an excellent buy. Pretty good risk to reward. I hate saying that. So here's IN. Now I brought this one up on December 18th. It's up about 10% since then. Had a pretty rough day today. Still up 10% considering that rough day. I'd be taking some profits here. I think this indicator now is at a divergence. I don't like that. Although these still look pretty good. So we'll see how good this indicator is. But for now, if I was still in this position, I'd be considering taking profits there. That's the end of this video. I'm going to be back with probably 2 more.